Good morning, everyone. I'm fine, thank you. Good evening, Ronak. Good morning, Ankush. Good evening, Rakesh. Good evening, Pravat. Good evening, Manjul. Good morning, Vikas Sharma. Few more minutes and then we'll start the session. Thank you, everyone. Thank you for joining the class. And we'll begin shortly. Good morning, Kabeer. And meanwhile, people are joining to the session. If any questions, so we can start working and discussing on the questions. If anybody has any questions. Good evening, Krati. Good evening, Shivam Chauhan. I'm okay. I'm fine, thank you. Thanks for asking. Better. So, any questions? Whatever we have discussed so far, whatever we have covered so far. Is there anything called vendor group? Yes. You can have a vendor group also. You can have customer group, and you can do different group, and you can do different properties also. So when you're doing grouping for properties, grouping could be for customer, and grouping can also be for the vendor. So you can do it on both sides. So if you see that here, so there is a customer group and there is also a vendor group. So these are the different vendor group. So you can define as many different kind of vendor groups also. So you can have a customer group, you can have a vendor group, you can have a material group. So you can have a different groups in SAP. Can you explain how we upload bulk data using GTW? Oh, no, that's a different topic. Good morning, sir. How are you today? I'm okay, Amik. Thank you. I hope you are well as well. Okay. Any other question? Anybody? Good evening. Good evening, Shivangi. Any questions? Anybody else? Good morning, Shivam, Gaurav Sharma. You can upload them to the data with the program. Okay. Good evening, Sunny Sharma. Good evening, Mukti. Okay. And any questions, any other question which we can discuss in the class? Okay, so let us recap what we did, how to install the SAP software. We will, somebody in our team will talk to you after a few days, and then we'll provide, we will normally provide, because software is only for 30 days. So we'll provide when we are in the middle of the course, because SAP software can only be provided for 30 days actually. So videos are there with you for 1 year, training material with you for long time. But as far as software is concerned, that can only be provided for 1 month. Okay, so let us restart. Let us start our discussion. So in the session today, we will talk about the process of the returns and exchanges. So many times what happens is, several, so we can have several situations where customer wanted to return the material back to us. And if customer want to return the material back to us, that is called the process of customer return and exchanges. Okay, so that is the process of customer return and exchanges. So we can do several things. If you see that here, there is a return. The return basically means when customer has decided to return the material to us, so they can return it. They don't like the material, is not of the right quality, some defective, some many other issues is possible. So in such cases, we can do customer return process. Then we can also have something called redelivery. Redelivery basically means that customer can take the material, we can send the material back. So customer has returned the material, and after the return has been done, we can return the material. Okay, so that is also possible. Okay, you can also do exchanges, where product A is being exchanged with the product B. So there are different situations is possible. In SAP, there is something called return material authorization. Return material authorization basically means when we are authorizing the product returning. So that is also called return request. Return request is authorization. So before customer can return material to us, we give an authorization letter to him. That authorization letter is return material authorization. And then based upon return material authorization, return material can come back to us. So we have return material authorization, and based upon return material authorization, material is being returned back to us. Okay. So these are the different scenarios. So where we can have a situation in which a customer want to return the policies, we want to replacement, exchange, credit. Sometimes we give a material back, sometimes we give money back. It could be either of the situations. And that is a very common occurrence in industry. So here, this is we created. So we created sales order multiple times. After the sales order, we created delivery multiple times. So that also we did. Okay. So we created sales order. With a sales order, we created delivery multiple times. For delivery, we can create a return request. And with a return request, we can basically create a return to the customer. So which basically means taking the material back from the customer for the product which has been returned by the customer. Then we can also do redelivery for the replacement. Sometimes we give a replacement product. In that case, we can also do, redelivery. And then we also have exchange by a negative row. Exchange by a negative row. So there is also a concept of negative row as well. So we'll see what is that negative row concept is about. So these are some of the things which we will be discussing and talking today. The very first thing which we're going to discuss is about returns. So when we're talking about the return, we have a different situations as far as the returns is concerned. So if you look at this diagram here, in this diagram system says that, okay, I made a delivery to the customer, and after I make a delivery to the customer return the material back to me. Now, customer can return me full quantity, or customer can return me partial quantity. It's possible that I deliver 10 pieces, after deliver customer return entire 10, or customer can return some part of that product. So customer has a choice to return the material fully or partially back to us. So we're going to see how do we do the return process. Now, one of the things which is here is, now look at this bullet point, return reverses the stock transaction. Now this is the important point, return reverses the stock transaction. Now what does this basically means? That basically means if I do a delivery, then stock reduces. When I do the return, then stock goes up. So that could be, so the impact of the return is a reversal of the stock transaction. Okay. So that is where we have a different stock situations. Okay. Then what is the return? What is the effect of the return? Now look, this is important. Now let's look at this, and we're going to see that when we get a return, then what is the effect of the return? So understanding the effect of the return is important. Now what is the effect of the return? Now look at here. So first and foremost, you see that quantity, there is a check mark, yes. Remember in the last class also we talked about general ledger. So general ledger value, that is also check mark. So we have a 2 check mark. Now what is the meaning of these 2 check marks, and what does this 2 check mark basically means? So these 2 check mark basically means that, and we can do this exercise also, then when material comes back, it increases the quantity. So that is the benefit, that is the point number 1, that it increases the quantity. Secondly, it also increases the value. because material coming back to me. When material goes out, quantity reduces, value reduces. When material comes in, quantity increases, value increases. Okay. So if we see that here, there is a return and there is a cost account. So there is some account entry. So these are different points which happens in the system. And then now look at this diagram. Now let's look at this picture. Now here what we are saying is return request. There are two situations. Situation number one, that I have created delivery. And then I'm creating a return request. And then I'm creating a return. Okay. Now another scenario here is, if you look at it here, it is possible that when customer is returning, so pay the difference. So pay the difference. Now the difference here is the return request is happening in two different stages. After delivery or after AR invoice. So either of these two situations, we can have that. Okay. So there are two different situations. Okay. So we have a delivery, then do a return request. Then I have a customer invoice, and from the customer invoice, we can create a return request. And if you see that here, there are two different boxes. If you see the difference. So here, one, it goes to return, and second, it goes to credit memo. Because if I have done the invoicing to the customer, at that time we have to do credit memo. If I have not done the invoicing, then I can just do the return. Okay. So these are the two different possibilities. We're going to do both. Then we also have here something called return request is an optional document. Return request is an optional document. What does this basically mean? So this basically means that if I'm creating a return, in that case, it is an optional document. We can create return, or I can directly, customer says, I know RMA, customer can directly return. We can do a credit memo to the customer directly. Okay. So we can do in both fashions. Okay. So we can do return request, we can do return, and we can do credit memo. Credit memo we do when we have done invoicing. Okay. Because we already got the invoicing for the customer. Now, what is the RMA? RMA return request. So in here, if you go back into the system, if you look at the system here, so we have a something called return request. If you look at my screen, this is RMA. Then we have return. Return basically means when customer actually send the material back to us, the return. Then we have a credit memo. Credit memo basically means when customer return material after invoicing. So we have to do credit memo because we have already invoiced the customer. So when customer returning the product after invoicing, at that time we will do credit memo because this is already too late for us. Okay. So that is why this is about the overall process for the credit memo and other situations. Okay. That is what we have here. Now, if you look at it here in this box, so there is a return. Okay. So there is a return. And then with the return request, we can do a return. And in that case, if you look at it here with the return, there is no accounting impact or nothing happened, because it's just a document for the information. Okay, so it is not having any other impact and all that. It is basically just a authorization. When the return comes back to us, at that time, it affects my, you see that here, accounts. There is some cost account, a stock account. It will impact certain account because material has arrived, material has been received in my warehouse. Therefore, there are some effect on the inventory and effect on my goods receipt. That is what the RMA is about. RMA basically in SAP is called return request. So when we see here there's a return request, this return request in SAP is called return material authorization. So we're going to do that exercise as well. Now here we have something called inventory effect on the return request and the return. In the last class, which we did, in the last class, we talked about what is the impact of sales order, delivery, purchase order on inventory. We did that exercise back and forth. What is the effect of the return? What is the effect of the return? Now, if you see here, in stock, let us say I have a 15. Available is 15, let's assume, because I don't have nothing committed, nothing is ordered, available is 15. If I get a return request, then it goes into ordered bucket because material is coming back to us. And then available stock increases. 15 plus 5 become 20. When the product actually come back to us, at that time, system actually increases my available stock. We're going to do this exercise. We're going to understand this exercise. Okay. Now, let us do an exercise. So, I select an item. So, probably the same item we created. So, this is a FIG002 automotive component. So, this is item. And in this item, this is the situation we have right now in this warehouse. If you look at carefully, this is automotive component. In the stock, I have 108 pieces. Committed is 30 pieces. Ordered is 10 pieces. Available is 88 pieces. So what does that basically mean? So 108 minus 30 plus 10, 88 is my available stock for the next. So let us say I want to create a sales order. So I want to go to sales order. I go to customer. I select any of my customer and I select this item FIG002 automotive component and select the delivery date whenever that date is. And after that, we enter the price We enter the quantity, 10 pieces. Okay. So this is a regular sales order. This is my customer. This is my item. This is my quantity. This is my price. And I add and view. See the message in the bottom. Operation completed successfully. That basically means we are able to create a sales order for 10 pieces. After that, again, I go back to the item data. And if I go to item data, I had 108, committed was 30, ordered was 10, available was 88. That was the situation. Now I hit on the refresh button. So we have this refresh button. Okay. When I hit refresh button, committed become 40. Did you notice? Earlier we were 30. Now this become 30. From 30, it become 40, 10 more pieces. Ordered was 10, because there's a purchase order we have. Available 78. It was 88. I got an order for 10 more pieces. It reduces my available stock. So 88 minus 10 becomes 78. Okay. This was my sales order, regular sales order, which we've done several times before also. Now after that, we go to the delivery. So we see then bottom, look at my cursor in the bottom. So I go to delivery. Okay. So this is delivery. This is my item number, quantity 10, and everything it copies from the sales order. And then we hit add and view. And we save it. Now see the message in the bottom. Now, if I want to go to replace the relationship map, what we did. So we created a business partner, microchips. We created a sales order number 696 on this date for $3,000 rupees. And then there is a delivery. Delivery is 641. And this is delivery number for 3,000 rupees. Okay. Now, after delivery the product, I'm not invoiced yet. And customers say, it's not a good product. We don't like it. See the screen. Look at my cursor in the bottom. Look at carefully. If you look at it here, I have a choice of creating a written request, or I can create written directly. You have both choices. So I want to go back to the sales written request. So this is a written request. See the message. This is a written request. It copies everything. Now in the return, he can return the entire quantity. He can return the part quantity. He has a choice. So you have entire 10 pieces copied. If you want to change it, you can change it. Because it's possible after 10, he's okay with the 7, 3 is defective, or entire thing is defective. So he has a choice. So in our case, just to make it simple, we take everything back. Okay. So we create a return request. Now what we have done so far, so we go to relationship map. This is what we have done. We create a sales order, this is sales order number, we create a delivery number, and after that we create a return request, and this is return request number. Okay. Now this is fine, but I want to go back to that item. So I close all these buttons. I close this, close all these windows, too many windows. And I want to go back to, I close this item, and I want to go back, close this also, and I want to go to item. This is item master. Now in the item master, this was my situation. Okay. So we have 108 pieces in stock, 40 committed, ordered 10, available 78. Now we refresh. So there is a refresh button here. Ordered become 20. Ordered become 20. 10 plus 10. That is what we see here. When you create a return request, ordered quantity increases ordered quantity increases. Why that is the case? Because this is an expected receipt. Because this is a return request. So we are hoping that this material will come. And then my available stock again increases from 78 plus 10 become 88. Okay, it again increases. Okay. Now I close this window. This was my return request. Now I want to go back to relationship map, and we have seen the relationship map, so I don't want to go back. So if you see in the bottom, look at here, copy to. I want to return now. So I want to go to return. So we have a return, this is item number, this is the quantity, unit price, discount, tax, this, that. Okay. So this is return now. And I say add in. Okay. So we add it. Yeah. So we want to add. So return has been added. Now I want to go to relationship map and see what happens with the return. So this is what we have done so far. We did a sales order. We delivered the product. Customer didn't like the product. He requested to return. We did a return request. And after that, he has actually returned the product to us. This is what we have done. Okay. We close it. Open this window. And then I wanted to go to my item master. This was the situation. Now we are looking at the impact. Understanding the impact is important. You can create a return. That's simple. But what is the impact of that return? What is the impact of return request? What is the impact of sales order? What is the impact of delivery on other processes? Understanding those impact is very, very important from the consultant perspective. Somebody say, oh, I know how to create a sales order. Yeah, creating sales order is easy. Creating delivery is easy. Creating return is easy. Creating return request is easy. But understanding the impact is important. Okay? So understanding the impact is important. So here, now, if I refresh, in stock, become 108. Ordered was 20, become 10. Stock goes up, and available becomes 78. This is the impact of the return, because when the return happens, material come physically in your warehouse. You can do 108. So you can do that as well. How do you return the sales? You can check like open order quantities. For what? Because you can see open quantities. For how many open sales orders or return requests you have. Now, one more thing which is important. If you look at my screen carefully, you see that return warehouse. That basically means that if we want, we can return the material in the return warehouse here to identify that how much material is actually lying. So if you see here, I have a different, return warehouse, QC warehouse, refurbished warehouse, consignment warehouse, general warehouse, repair warehouse. So in order to have a logical segregation of inventory, in order for you to have a logical separation of inventory, because you return cotton 10 pieces, return came, but you wanted to quarantine. If you want that stock to be in separate buckets, then you can put this into a separate warehouse. That is why we see here, you have a different warehouses. Okay. So you can logically identify how many materials are. So what exercise we have done? We have done exercise This is the exercise we have done end to end. We create a sales order, we create a delivery, we create a return request, we create a return. Now one more thing. This is the return. We saw the impact on inventory. And I right click and I see the journal entry here. If I go to journal entry, what we see here in journal entry, look at the account. Now we are going to finance now. In SAP world, most of the finance entry will happen automatically. Now see here the finance. Now in the finance, we see that stock account is debited. Debit, because material has come in. Because material has come in, so we can put a debit here. And finished good inventory has been credit. So that basically means when we do here, at the time of returns, there are two journal entry. This is what is important with finance. Make a note of it. Take pen and paper. So debit, my inventory stock account, because material has come in. And credit, my cost of goods sold. Okay. So there is a debit and there is a credit. Okay. So we can do debit and credit. Make a note of this. These are the financial posting happens when we're doing the credit that you need to know. This is an interview question. This is a certification question. And what kind of entries you will be doing at the time of inventory, at the time of returns. And this is the returns integration with the finance. These integrations are always important. Creating sales order is easy. Creating delivery is easy. Creating a return request is easy. Creating written document is easy. But understanding their subsequent impact in the background is important. So these are the, and wherever there is a finance posting, I make a note of it here. Ordered item purchase. Yeah, you can put in different bucket, right? We talked about different warehouse. Sir, I have a question. Where are the seller? Here we are seller. Why are we request return? Customer is requesting return. We are not requesting. The customer is asking us to return. We send the material to customer and customer calls back and say, sorry, we didn't like it. We will not return it. Customer will return it. They don't like it. It's damaged, it's transit, it's not a good quality or any kind of issue. So material is returned by the customer to us. Make a note of this finance entry. Okay. Now there is a situation called redelivery. Okay. So there is a situation called redelivery. Now that redelivery basically means that customer says, okay, I return the material to you. I want this product back. So material got damaged in the transit, something was not right. And can you please send the material back to us? That is called redelivery. So redelivery, when customer says this is the product defective, we send you back, give me the new material. Give me the corrected material. And when we send the corrected material to the customer, that is called redelivery. That is called redelivery. Now, if you go back here, if I go to relationship map, And here I have a sales order, delivery, return request, return. I go back to the sales order. Now in this sales order, if I go in the bottom, system allow me to create a delivery again. Now I create a delivery. I add it. Now what happened? This is what happened. This was my original sales order. We had to create delivery. Product has been returned by the customer and there is a return back. And after that, customer says, give me the product again. And I send the product again. I create another delivery with the sales order. So we create re-delivery. So there is a delivery here. This is example of re-delivery. What we did, we created re-delivery with sales order. Okay. Make a note of this. We created re-delivery with a sales order. That is a re-delivery. This is example of the re-delivery. That is what we did. We have a sales order. We created delivery. After that, customer has returned it. And after the return, I create a subsequent delivery with the reference to the same sales order. I create a new order. And this is what we have done. The sales order, delivery, return, request, return. After that, product come back with the same sales order. I create a new delivery. Okay. So this is an example of a re-delivery. Re-delivery. There is some prerequisite for re-delivery. So in the configuration for re-delivery to work, there are some customization. And once that customization is there, then you can do. So if you go to in the document setting window in sales order, you have to have a reopen quantity. This should be checkbox on. Now where is this configuration? We close this, we close all this, we close all this, we close all this, we close all this. Now I want to go to configuration, we go to administration, system initialization, we go to document setting, and per document I select my sales order, and here this checkbox is that my cursor reopen doc by creating return, go return credit memo based upon the document. So what does it do? That it reopens the same sales order after the delivery and allow you to create another delivery with reference to that sales order. But what for that, this checkbox should be on. And if this checkbox is on, then you can perform this delivery document. Okay. We can use same sales order many times for delivery as long as it is open. Yes. Not many times. This get open because of the delivery. Otherwise, once sales order you deliver, it closes. You cannot use it beyond the quantity. If you have 10 pieces, if the sales order, if you deliver 10 pieces, order is complete. You cannot use that sales order again. But because of the return, that same sales order opens up. So that opening of the sales order happens because of returns. You understand the difference? So that is the configuration. There's a prerequisite, and if that is there, it will open the same sales order. There is also something called exchanges by negative quantity. Exchanges by negative quantity. So negative row allow you to give credit directly on the sales or purchasing document. So you can create a negative transaction in the sales or in the delivery or in invoice. That is called negative row. Negative row can be added to sales transaction, can be added to purchase transaction. Okay, so you can have all those different transactions. Now, negative row, you can make a correction in the original delivery, original invoice, without you have to create a separate return or a separate credit memo. That is another functionality. For example, let us say I go back to my sales order, I create a sales order, select my customer, select my item, quantity whatever, 10 pieces, enter the price, enter the date, we save it, sales order being saved. After that, we create a delivery document. So we copy to the delivery document, we save it, what we did, we create a sales order, we create a delivery. These are the two documents we created. Now in the delivery, we have a copy too. And here we have an AR invoice. This is the AR invoice. In the AR invoice, I can enter the quantity with a negative sign. You see that here? Negative sign. We can enter the tax code. We can enter the tax code. We can add and view. We created a transaction with a negative row. So we create a sales order, we create a delivery, we create an AR invoice. This AR invoice is open. If I want to go to this AR invoice, if I want to go to journal entry, now see the journal entry. See the journal entry. Look at carefully. So one transaction is that my customer is debited, my tax is credited as normally, my sales revenue is debited, but because I have a negative entry, so I'm taking return also. So because of the negative transaction, second row. So the first three transactions, these first three entries are because of my invoice. These two in the bottom is because of that negative entry. And what is that? Because I enter the negative quantity, minus 10, and because it's a minus, because it's a reverse, so my inventory has arrived or returned to my warehouse. So my inventory is debited and my cost of goods sold is credited. So we have done invoice posting with a negative quantity. We did a redelivery, and then we created invoice with negative row. And the negative row, what happens is, negative row is like a customer return. So because of that, what happened? Because of that, debit my inventory, stock account, and credit my cost of goods sold. This is the entry. Now, if you look at it, these two entries and these two entries are exactly same. This entry and this entry is exactly same. So when you enter the negative row, it acts like a customer return. So if you see this journal entry and this journal entry is exactly same. Okay. Because it's a return. Because negative row is like return. That is because we have two lines. So this is, we have this line is a negative 10. And because this is a negative 10, therefore this negative 10 acts as like a customer return. Okay. So we saw how do we do negative rows. We have done this negative row. So these are some of the scenarios. And we did customer return request. We did some of the different scenarios, etc., etc. We also did. Now, one more thing which I want to do. What we have done is that we have created a return request with the reference. So what we have done is that here when we did a return, we created this return with reference to delivery. This also we created a return with reference to existing document. But you can always create a return without knowing a previous document. Now pay attention what I'm saying. You can also create a return without having a previous document as well. Now, what is the meaning of that is? What is the meaning of that is? Let's say customer want to return after 6 months. Let's understand what I'm saying is. So, what does that basically means? Customer return with reference or customer return without reference. Both are possible. With reference basically means that I know which delivery was it and what invoice was it. But in this case, we do not know invoice. We do not know delivery number or invoice number. This is with the reference. This is without reference. Now, this happens in the real world. This is a very likely possible scenario. Now, what happens here is that let us say customer keeps supplying the material every day, like many times in the repeat manufacturing, you are supplying material, hundreds of material on daily basis. And after 6 months, customer, or 3 months, or 15 days, customer say, oh, I have these 2 pieces lying, which is waste. I don't know which day it came. It is very difficult to recognize that on what date we got those material back. They are bad. They are your material. These are your items. These are your components. But we don't know which date came. It may be Friday, maybe Thursday, maybe Saturday. They are all lying in my store. Because after some time, they are kept in the same location. We can also, okay, I have 200 pieces. I don't know which 100 came from which sales order, which delivery. There is no marker. So in that case, you can also return the material without reference also. So for example, so if I go to here, return request, and customer, we choose the customer, and we can select the item. And customer says, this item, 2 pieces are lying in my warehouse, and I want to return it to you. I can enter the price, $300, 2 pieces, coming back to me. This is a return request. Then I go to copy to button. Then I can do return. And I create a return. And if I go back and check the relationship map, I have return request, I have delivery. I have no reference to any order. I don't have any reference to any delivery and invoice, etc. Because I don't know which one was that. Because several days has gone past. But that's your material that we know. So that is how we can also create this return delivery with references and also without references. Okay. So we can take return, customer return, redelivery, negative row, customer return with reference, without reference, all that scenario we have done and their impacts on the subsequent process. Now we have next situation that is called AR Credit Memo. AR means customer return and credit memo. Now what is the meaning of that? What is the meaning of this? Okay. AR Credit Memo. So that basically means correct issues that happens after AR invoice has been created. So customer can also return the material after the invoice was created. That is also possible. Not after delivery. I've created invoice also, send the invoice as well. And after that, customer comes back and say, sorry, we are sending this material to you. That is where we say good issue that occurs after an AR invoice has been created. Customer can return anytime. Customer can return after delivery. Customer can also return after invoicing as well. And if customer is returning after invoicing, then we have to issue a credit memo. Because we have already invoiced, therefore, we have to correct that invoice after credit memo. So customer want to return the material, we have already invoiced, and we want to do that posting after invoice. Okay, So this is what we have done. So after delivery, we can create a return request, and then we can create a return. That part we have done multiple times. This is second situation where we have AR invoice. In the AR invoice, then we create a return request, and that time we select a credit memo, not return, because we need to give the money back. Okay, so that time we do AR credit memo. Okay, how do we do that? So how do we do the credit memo? So we create a sales order, then we create delivery, then we create an AR invoice, and after invoice, we want to get a credit memo. Now, when we create a credit memo, again, it has impact. What are the impacts? Let's understand that. Let's see. Credit memo reverses both invoice and the delivery. So make a note of that. Credit memo reverses both the invoice and the delivery. That basically means credit memo reverse invoice. That basically means my customer has been debited. Now it reverses the customer outstanding. And also, my inventory also has to come back as well. So in that case as well, credit memo will do both. So make a note of this statement. Credit memo reverses both the invoice and delivery. That basically means it reverses your stock. That basically means it also reverses your outstanding with the customer. So this is important statement. So credit memo, make a note of it. Credit memo reverses both invoice and delivery. What is the meaning of that is? That basically means customer AR is reversed. Stock return is also reversed. Okay, make a note of this. How does it happen? We're going to see. Make a note of this. We're going to do this exercise as well. Can we track over or short delivery in SAP? Yes, of course. You can supply any quantity. In the relationship map, you can see we talked about, right? In the class before, last week, where you can have a more quantity in the delivery, you can have less quantity in delivery. We did that exercise also last week. Okay, so that is a credit memo. So what is the credit memo does? Let's do this exercise. Okay. Let us do this exercise. So I want to do credit memo exercise, and I want to see what happened with the credit memo. So I want to do credit memo exercise. In the credit memo exercise, I want to do end-to-end cycle. So I want to create a we can start sales quotation or sales order, doesn't make a difference. So we create a sales quotation, we select the customer, we select the item FIG 002, how much we are, 10 pieces, what is the price, $300, and we create a quotation. Okay. So quotation created, so sales quotation. Then we copy to sales order. So next button is sales order. So this is sales order and all that item. And then we create a sales order and we sell it. Okay. So we create a sales order. If I see the relationship map, this is what we see. The relationship map, we create a sales quotation, we create a sales order. Okay, so far so good. Now after the sales order, I want to create a delivery. This is same thing we have done multiple times before. So we create a delivery document. So this delivery, item number, quantity, add and view, and then we add. Okay. We create delivery now. And after delivery, I want to go to the next step, and that is the AR invoice or custom invoice. So we go to AR invoice, and this is the custom AR invoice. And I enter my tax. This is my tax amount. And I add and view. Okay. So what you have done so far? So this is what we have done so far. Let's see the relationship map. For this customer microchip, this is my sales quotation, this is my sales order, this is my delivery, this is my custom invoice. And this is my red color because we have not yet paid. Okay, so that's the situation we have. But now customer says, sorry, I want to return it. So here, I want to go back and see in my screen here, in the bottom, I have a return request. I have two options, return request and credit memo. I can directly create a credit memo also, or I can create a return request, then I can create a credit memo. So I say, I want to create a return request first. So this is my return request. Select my customer, item, quantity, add, return request is being done. After return request, I go back to the credit memo. So we create a credit memo and then we put a add. Okay. So what we have done so far. So we go to relationship map. This is what we have done. Okay, let me make it a little bit larger so we can understand, we can read it. Okay, so we create a sales quote, with a sales quotation, we create a sales order, with a sales order, we create delivery, with the delivery, we create AR invoice, with the AR invoice, we create a customer request, a return request, and from the return request, we are creating AR credit memo. This is end-to-end cycle with AR credit memo. Okay, now I want to understand what is this AR credit memo. I want to go to general entry. Okay, I want to go to general entry. Now see here, what's happened. What happened? So we have a customer, we have a microchips, credit, CST, debit, revenue, debit, reverse entry now. And see these two entries, 4 and 5 in the bottom. Stock account. Remember, we mentioned both. What credit memo do? Customer is reversed and customer return is also written. It reverses my invoice. It also reverses my delivery. Understand this. So these first three entries, microchips credited, customer is credited, tax debited, revenue debited. This is what is this is the first three entries. 1, 2, 3. Those three entries are the reversal of the customer invoice. Then we have two of these entries, stock account debited because it came back, and finished good account is credited. So at the time of credit memo, it actually reverses both general entries. It reverses my account customer invoice entry. It also updates and my delivery general entries also. So both of them, it basically updates. It updates both. So that is an interesting and important message for us. to understand that it will reverse both. Okay, so we can, that is very important point to understand. It reverses my customer liability. It also reverses my posting, which happens at the time of delivery. It reverses both. Ultimately, your ability to do credit memo and all that is simple. But understanding these impacts, I've been saying repetitively, is the most fundamental part of understanding. Because that is what actually the learning is all about. Okay? That is what we see here. Increase the stock of credit and credit the value customers. So it basically stock account, so it updates both. So credit memo has an impact on reversing the AR invoice, reversing delivery invoice. Both it reverses. Okay. That is also given here as well. So if you want some point of time, you can read that as well. Now here we have another situation. Now look at this. Now here the situation is that credit memo from the closed or paid AR invoice. Now look at this. This is another interesting scenario. So customer can return after delivery. Customer can return after invoice. And customer can also reverse after he made a payment. We made a payment, the customer made a payment to us also. And after that also customer says, sorry, I'm returning it. And I may accept the material from the customer after we made a payment also. These are all agreements. These are all different kind of agreements. So return of the material can happen at the multiple stages. So return can happen after delivery. Return can happen after customer invoicing. Return can happen also after customer has made a payment to us. Customer says, sorry, I made a payment. I don't like this product. I'm sending to you. So you have to give a customer payment back even after customer has made a payment to you as well. It all depends upon the terms and conditions, etc., which you might have with the customer. Understand the difference. आवाज नहीं आ रही है. Oops. Can you all hear me? Is my voice coming to you all? Is my voice coming to you all? Okay, Naveen said he's not hearing me. Okay, maybe Naveen, mic and speaker. You can hear my voice. Okay, so Gagan can hear Gaurav. Okay, thank you. Shivam. Okay, wonderful. Ankush, thank you. Hearing well. Okay, so now this is the scenario is where okay, so this is called credit memo from, so this is the credit memo from the closed and payer invoice. So how can we make a payment to the customer when we can give a credit when we also have made a payment? Let's understand this scenario. So for example, I close this, I close this, I close this, I close all this. Okay. So I create a sales quotation. I select my customer. I enter my item. Quantity 10 pieces. Price is $300 in it. So we create a quotation. After quotation, we go back, we create a sales order. This we have done multiple times. I'm going fast. This is a repeat of the same step. Okay. So we create a sales order. After creating a sales order, then we create a delivery. So we create a delivery. And after creating delivery, we also create an AR invoice. We create a customer invoice. So this is the customer invoice. So this is the customer invoice. We put a text code and we add and we save it. So if you go back here and if you go to the relationship map, this is what we see. So we get a quotation, we got an order, we deliver the product, and we also make a customer invoice or AR invoice. Now let us say I close all this, close all these windows. Now customer also make a payment to me. So we go to banking, incoming payment, incoming payment. I select my code. I select my customer, and these are all my different payments. I go back in the bottom, and now here we have these payments. This is invoice, I think 633 invoice number on 10/6, so it's supposed to be today 3,100 cash discount. No cost discount, and I want to make a payment, and this is payment. You can pay by check. So what is the amount? So amount is 3,120, and I add, and I add, and I add. Okay. Operation completed. Now we go back. If I go to relationship map here, if I see the end-to-end cycle, if I see the relationship map, so this is what happened. So we have a sales quotation, we have a sales order, we have a delivery, we have air invoice, we have incoming payment. This is whole end-to-end cycle. We got an incoming payment also. So we have got the payment as well. Hello? Not listen well? What? Is my voice coming to you? You all? Please make sure your mic and speaker on. Okay? So make sure that your mic and speaker on. Crystal clear. Okay. 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 So, okay, very well. Thank you. So, so we are going to our scenario. So this is what we've done so far. Their air invoice, and here I go back to air invoice, and then I change the document status to open. Okay. So here we can change the document status to open. And I update. So now I open this AR invoice again. Then in the bottom, I want to create a return request. So if I go back to the return request here, then we can create a return request. So this is a return request. And after that, I want to create a credit memo. So this is what we have done so far. So let me relationship map. This is what we have done. We create a quotation, we create a sales order, we create a delivery invoice, we create a customer invoice, we got a payment also. We got a payment also. There's a payment. And after that, customer returns, and then we give a credit memo to the customer after customer also has made a payment to us. So this is an example of giving a credit memo after we got paid by the customer. Okay. So this is the credit memo for closed paid AR invoice. Can we also make payment to the customer? Yeah, you can cut the check. Means customer can also be my vendor as well. We talked about this last class. Now, this is another scenario. This is another scenario. My customer can also be my vendor too. So you can make a payment. Now look at this credit stock return without credit without return to stock without. Now what is the meaning of that is? Every time we have done the credit, we impacted the stock. Stock comes in, stock comes in, stock comes in, stock comes in. But stock doesn't come all the time. If I'm selling perishable item, if I'm selling chemicals or pharmaceutical or many other consumable type item, food, groceries, if I'm selling food or perishable item, once I sold, nothing come back. It's a waste, it's a scrap. So that basically means that scenario which we've been talking about, that credit comes back, material comes back, material comes back. In case of many things, material may never come back to us. Material may never come back to us. And why that is the case? Because that is a perishable item. And because it is a perishable item, therefore, that material got waste. So, this is another scenario. In this scenario, we can talk about so credit to customer without stock return. Without stock return. Without. Material is not coming back. How do we do that? So if we look at it here, when we're creating a credit memo, there is a checkbox without quantity posting. Okay, without return. Now, how do we do that? So let us say I close this, all these windows, all these different windows, and then I want to go back to here, let us say in credit memo, and if I'm creating a credit memo, select my customer, select my item, quantity, price. Now see that here button, a small button, quantity without quantity posting. Without quantity posting. In this case, what happens? Material does not come back to me. I give a credit to the customer. I give a money back to the customer. But product does not go back to the customer because it's a perishable item. Material has been goes, and then nothing for us to return. So it is because of perishable item. So there is nothing get ever returned to the customer. So we did a credit memo without credit item. If I see the journal entry here, now in this, look at the difference though. Look at the difference. Now in this journal entry, in the finance, because most of these transactions has a finance impact. Everything is revolving around finance. Yeah? This finance impact is critical. This finance impact is very critical. Now if you see, there is no stock account. My microchip, my customer is been credited, my tax is debited, my revenue debited. Stock account, no impact. Okay. So that is the difference. Okay. That is the difference in this scenario. Credit without return to the stock. Credit memo without reference also we talked about. That was means like last credit memo which we did. So this credit memo which we did here, it is without any reference. I can just create customer calls and say, oh yeah, I need material. Which invoice? Oh, sorry, I don't know. Because in case of repeat customers, we are selling them goods every day. Like it happens in corporate world very time. You're supplying some of your good customers every day. And customer calls me after 15 days. They don't know which invoice, which delivery was. So, but they want to return it or they want to need a credit memo. And then you can do a credit memo without reference. So this is a standalone credit memo to this customer. We don't know which invoice it is. And that is where we say credit memo without a reference. Okay. So that is a credit memo without a reference. You can do credit memo without reference, without quality posting, with quantity posting. Both scenarios we can do. We can do cancellation also. Sometimes we need to cancel. And we want to cancel that invoice. You can do cancellation as well. It's not returned. Customer wants cancellation. You can do cancellation also. We did a wrong invoice. There was a user error. Now, why will you do cancellation? Cancellation you will do because you selected wrong customer. User error happened. In those kind of a user error, rather than doing a credit memo return, you will do cancellation because that was a mistake. So for example, we did a quotation. After that, let us say I create a sales order. We create a sales order. After sales order, we create a delivery. After delivery, we create a invoice. And this invoice. And supposingly we created some mistake and this was a problem. This should have not been the case. User error happens. So if you look at it here, there's a relationship map. We create a quotation, we create an order, we create a delivery, we create an invoice. Okay. Now if you go back here, we also have a button called cancel. So we go to cancel. And we are doing AR invoice cancellation. Operation completed. Now this is what happened. So we create a sales quotation, we create a sales order, we create delivery. This is AR invoice. And because you cancel, it comes up with a special marker, yeah, and it's a closed. And here, this is another AR invoice. It's another invoice, and this is basically a cancellation document. Okay, so this is a cancellation. So this is the cancellation example which we did. Summary: these are different scenarios which you have done today. And I have a good news. What is the good news? Class is over. Class is over. Thank you for joining the class. And talk to you tomorrow. So talk to you tomorrow. Thank you all. Take care. Bye guys. Talk to you guys tomorrow. And we'll continue. Same time, same place. Thank you.